You're watching today's video technical update presented by FXTimes. It is Tuesday, August 10th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. It's about 2.5 hours before the FOMC announces interest rate policy and intentions. This may be an event risk, and the market has shown some short covering of the greenback as it continues to gain across the board. Let's see where the US dollar crosses, such as the euro dollar and dollar yen, are from a technical perspective as the market focuses on this important US announcement. Make sure to check out FXTimes for other updates and insights on this and other fundamental events as well. This video is being produced at about 12 p.m. Eastern Time during the US trading session. First, we'll take a look at the euro dollar daily, and this is 2 days in a row now that the euro has slid against the dollar. Dollar's gaining across the board ahead of this FOMC statement. So right now we have the RSI here dipping lower. You see it's lower than this previous low here, but if the price does not accelerate downwards and starts to slow down, then we may develop a positive reversal, which would suggest another rally up towards at least this previous high at 133. Okay, so that's after, that's looking for support. But for now, we should be stalking the current decline. Here's a 4-hour look. We have a lot of support here at 130 and a little bit here at 131. You see 38.2% and 50% retracement. So here, there's some temporary support that should hold the market for now ahead of the statement, FOMC statement. Now, if that breaks, there's a chance it could go lower towards 127.50. 127.50 is here. You see 50% retracement of this swing, which could be wave number 3. See, in the daily, you see this could be wave number 3 in this channel, breaking lower now. So this is possibly wave number 4, which should look different than, which should be different than this wave 2. But we'll see what kind of correction pattern develops. Okay, so that's mainly what I'm going to look at, is looking for the correction pattern. If today's reaction is strong, then I'm going to wait until the market winds down from the volatility. Now, 4-hour time frame, we saw the RSI here also breaking below 40, so that's a bearish outlook. 1-hour time frame, the market has already broken below 40, the RSI has, and it's in the oversold zone, which is a bearish signal as well. But in the near term, we may have some overextended or oversold conditions. So here what we have is possibly 1, 2, 3, 4, 5. So we do have 3 waves down. We have bullish divergence. So ahead of the statement, we may be fluctuating a little here, correcting a little upwards. So if the market after the statement breaks above the central pivot here around 1.32, then the market should be heading back towards 1.33, possibly 1.35 into this consolidation zone. Okay, so if the bearish outlook, however, should bring the market down towards 1.2750, where it tests an important support. If the 1.2750 breaks, it may go down to, back to the daily now, this 1.25 area, and still maintain a bullish outlook. This could be wave 3, and 4 cannot break 1. So euro dollar could still have a bullish outlook after the current reversal. Alright, that's the pound dollar. Continues to slide as well, similar to the euro dollar, and broke this 200 moving average in the 1-hour time frame. We have in the near term a bullish divergence, so we may have some correction ahead of the FOMC statement. But again, similar outlook. So if you look at the daily, we have some possible topping action. The differences between the euro dollar and pound dollar, you see this low here, this high here has been broken, but when you look at the euro dollar, this is the previous high and has not been broken. So pound dollar still is, in the intermediate term, the stronger pair than euro dollar. So if you trying to gauge the dollar comeback, see if it can be it can do so against the pound. But really, we should move on and look at the US dollar Japanese yen for more clues to whether this could be a sustainable US dollar recovery. Quick look at gold. Here stuck below 1210, 50 moving average, maybe a little reversal. As I mentioned, there may be a negative reversal developing, which gives you this swing projection. So 1150, this 200 moving average is still going to be the target if the market continues lower for gold. 1 hour time frame, you see here is a possible 1, 2, 3, 4, 5 wave, or it could have just been a correction. Hard to say for now, but possibly we'll get clues after the FOMC statement. You see gold is rallying now. It should find some resistance around this area. So this is a 1 hour time frame. We got a couple more hours to go to the FOMC statement. So if it breaks above, look for it to invalidate this outlook. Okay, so if it breaks above 1210, invalidate the outlook. Otherwise, we may continue lower, and if this in the 1 hour time frame, market breaks below 200 moving average and stays lower, that could be a sign for this outlook to materialize. All right, so that's gold. The US dollar also gained against the Japanese yen yesterday, but today is having some trouble with that. So what we have is this projected decline, and the market has reached this. And this is also a very important, very significant support zone. So the market is respecting it. Looking at the 1 hour time frame now, we have a bounce from this 85 area, but now it's testing the 200 moving average and has not broken that. It's giving us some bearish candlestick action along with your bearish divergence. So dollar isn't really having any impressive gains against the Japanese yen, and that refrains me from gaining confidence in the dollar recovery just for now. So we want to see the market break above this 200 moving average in the 1 hour time frame, and also if the RSI reaches above 70, goes into the overbought zone, that should give us some signal that dollar may recover. Otherwise, we're staying in this consolidation zone. And even if the dollar does rally, looking at the daily, there are some more important levels to break. Otherwise, we could only assess that we are in this ranging action between 85 and possibly 88. Okay, so right now this is the new zone that the market needs to break before the dollar is really seen on a recovery. Following up now on the dollar Canadian dollar, we spotted this wedge yesterday and the market broke above that. I mentioned that here it should go up to 1.04, which was the resistance. Looking at daily, that's sort of the central pivot of this triangle, and these moving averages as well, and the market is at the moment respecting that after this dollar rally against the Canadian dollar. So looking at 1 hour time frame, again we have some reversal candlestick if the market does close around here or even lower. So ahead of the FOMC statement, if the market actually after the FOMC statement, if the market actually continues to rally above 1.04, it could go up towards 1.08. Okay. However, if the market does not, then 1.04 becomes resistance, and we may come back down to test 1.01 again, and possibly even parity if the FOMC statement is dollar negative. Now looking at the Aussie has been very strong, and just like any dollar crosses, the greenback is gaining. And here's a 4-hour look. We had anticipated this to be a end of wave 5 last week, so if this is, then we have this ABC or whatever correction, which is a larger wave 4, and that should not go below 0.88 for a bullish outlook. So for now, if the FOMC statement is dollar positive, we should see if the market can still be supported above 0.8850. and if it is, then we still have another wave to go to complete an impulse wave up. Alright, so that's the Aussie dollar and Canadian dollar pairs. I'm going to try a quick one for dollar Swiss franc. Here's the daily. If the market breaks above this current consolidation, it may go to 1.09 area. However, if today's FOMC statement is negative for the dollar, we see that we're in this range and we have completed ABC, XABC. So we may be done with this consolidation, and there may be some bearish continuation. So at least we should look for 1.0350 as the target if there is dollar negative news. And that wraps it up for today. Tomorrow I'll be hosting a Charters Corner strategy session that will surely discuss the consequence of today's reaction to the FOMC statement. So make sure you check out FXTimes and register for an invite. Once again, I'm Fan Yang, your technical analyst here at FXTimes, wishing you good trading.